Today we'll be looking at how to add indicators and tools to your charts. We'll also explain what the indicators and tools in Metatrader 4 are useful for, and how and why you should use them. The first step is to add indicators and tools to your chart. To do so, click on Insert, select Indicators, or click on any of the individual tools from the menu below. You can also drag indicators to your chart from the Navigator menu to the left of your screen. Charts can be viewed in three different ways. A bar chart is a simple style of chart, often used by some technical analysts. It's indicated in lines. The top of the line indicates the highest price that the instrument has reached that day, and the bottom represents its lowest price. The opening price is displayed with a horizontal line on the left side of the bar. The closing price is displayed with a horizontal line on the right side of the bar. Candlesticks, also used by technical analysts, show the same information as a bar, just in a different way. Just like a bar chart, the daily candlestick line contains information about the market's open, high, low, and close for that specific day. The real difference from bars is that candlesticks feature a fuller body, which represents the range between the open and close of that day's trading. When the body is filled in, or black, it means the close was lower than the open. If the body is empty, it means the opposite. The close was higher than the open. A line chart is the most basic type of chart used in trading, and is generally created by connecting a series of past prices together using a line. Line charts give a reader an idea of where the price of an instrument has travelled over a certain period of time. When you analyse and review charts, you can use trend and momentum, support and resistance patterns to make an entry. By analysing charts, you're scanning them to see if there is something interesting according to your trading plan. Then you can make trading decisions based on these tools. Here we can see momentum and correction. The red arrows indicate bearish momentum, and the blue arrows indicate corrections. The overall trend is indicated here. You can understand trend by looking at higher highs and higher lows for an uptrend, or lower lows and lower highs for a downtrend. The red circles indicate the downtrend, and the blue circles indicate the uptrend. The fractals give you more of a visual clue about the trend, up and down. As you can see, analysing trend and momentum is a very basic way of understanding your chart. Support and resistance are important too, because they show where price could stop. Resistance levels are sometimes regarded as a ceiling, as they are the points that, over time, appear to be hard for price levels to move past. Support levels act as the floor, preventing the price of an instrument from being pushed downward. Patterns indicate the psychology behind the market. They can indicate that price is continuing upwards, is stalling, or is reversing and continuing lower. You can learn a lot from analysing chart patterns, but you should also check out oscillators. Oscillators sit at the bottom of your chart and compare price action, showing you the momentum in the market and its characteristics. For example, if it's waning, reducing, or getting stronger. Keep researching different techniques and practices, improving your trading strategy as you go.
Shutterstock Music.